Trading futures and options on futures involves substantial risk of loss and is not suitable for all traders and investors. Oftentimes in futures trading, you have a high combination of leverage and volatility, and although this could be an equation for opportunity, it's also an equation for risk. So be careful, only fund your futures trading account with risk capital. My personal definition of risk capital is money I could afford to lose, doesn't change my lifestyle, or overly stress me out. As human beings, we make bad decisions when we're under stress, so be in a good spot. Remember, micro contracts could be friends. Take it easy on the day trade margins. You get plenty of leverage without maxing out on those day trade margins on a regular basis. We'll be taking a look at a real-time simulated live NinjaTrader trading platform today, and none of this should be construed as trade or investment advice. Past performance not indicative of future results.
Well, good afternoon, good evening, and welcome to Traders Workshop for February 6th, 2024. I'm your host, Tom Schneider, CMT with NinjaTrader. And on Traders Workshop, we like to invite NinjaTrader Ecosystem partners to come in and share their expertise and, advise you on how you might become a better trader. This week is no different, although this week is different because we have a brand new contributor to the show. It's a guest that we haven't had on before, and in getting to know this guest, it's been my pleasure to do that. So without any further delay, I'm going to introduce Dr. Levy, who's the co-owner of the EG Trigger Point. Really fascinating stuff here. Dr. Levy, how are you doing today?
Hello. Hi, Tom. I'm doing great. How are you?
I'm doing great, and great to have you on here. I know we've been talking for the last couple of weeks, and I got to see what the presentation, what the trigger points are somewhat about. I won't say all about, and just excited to have you on here. So, but for the purposes of our guests and getting to know you, first of all, where are you? It looks like you're right next to me in New York.
Yeah, so we're an Israeli company. So right now I'm located in Israel, and I'm happy to be here presenting my stuff, my company, and the EG Trigger Point, as you mentioned.
Well, that's great. That's awesome. And just a little bit of I don't know, you call it housework here, but I do want to remind everybody that the chat is open. So if you want to join the conversation, if you want to ask Dr. Levy any questions about what you see here in this presentation, you can go to ninjatrader.com/events and hit that play button, put in a handle. We've got mission control monitoring the chat board so I can see your questions. I can forward them on to Dr. Levy, and we can, just experience that community that we like so well in the chat. And today's no different. But Dr. Levy, maybe right before we jump into the presentation, can we just talk a little bit about you? And I think actually it might be part of the presentation as well. So maybe, Jason, we can share that for Dr. Levy. So that's great. So Dr. Levy, if you just don't mind like explaining who you are and how you got to be involved in the fascinating world of trading futures.
Yeah, okay. So I'll jump in the relevant presentation. So about me, I have a strong background in machine learning and cybersecurity. These are two topics in computer science. And during my academic journey, I led several AI projects, and I have 3 degrees in software engineering and computer science. And also, over 15 years in the high-tech industry, I have 10 patents and academic papers. And the last 3 years, I started my trading journey, learned a lot of materials, and I started trading. And my main interests are algorithmic trading, AI, applying AI in algorithmic trading, and market analysis using software tools.
So Dr. Levy, I just want to ask you a couple questions. So AI has been a buzzword. I think that the more and more the main general public has been discovering, let's say, the last year. But you've been doing this much longer, and I've had some exposure with my previous career at Bloomberg to what was then called AI, which I think was very, very primal the way we were doing it there. but you've had experience this in many years, right? I mean, it seems like you're on the ahead of the curve on this.
Correct. So when I started trading and learning trading and market analysis, I tried to think how AI can be applied in this field. So AI is basically about optimization missions, meaning that, and here I'm showing the trigger points as a good example. The trigger points is our main product, the most popular product of EG indicators that I own. And what it does, it presents significant price levels, the lines that you see here, and it aims at solving mathematical problem where we attempt to maximize the likelihood of market reaction when it reaches these levels and minimizing the liquidity gap risk. So this is what the AI stands for. And it daily updated, meaning that the AI knows to relearn, retrain, to adjust to the market changes. Every day the market changes and the AI learns how the market changes. So the levels that are the output of this AI engine are getting updated on a daily basis.
So that's interesting because when I've been looking at systems trading, you look at data sets and you test within a data set, and then you test another data set, and then when you come down to all of that, you have to test out of sample. But this is not that. This is take it. Well, it's that, but it seems like it's an ongoing process, like you said. It's constantly revising. It's not something you do on Saturday and apply it for the rest of the year. It's continually happening.
Yeah, it's a very important point, and it relates to the property of this indicator that I'll show you in a minute. The fact that it's a leading indicator, meaning that leading in contrast to lagging indicator, these levels are delivered to our customers before the market reaches the area around them. So it has nothing to do with it has to do with predicting the future. And today, I'm going to show it. So again, the trigger point is an AI-based support and resistance, and it was developed for futures day traders, providing short and long opportunities while we consider reversal trading. And the supported futures are ES, NQ, RTY, YM, GC, and CL. And you mentioned a very good point related to algorithms or AI that it can generalize, meaning that these are completely different assets. Some of them are correlated, like the ES and NQ, but the same algorithm, the same AI is able to learn and produce the significant price levels for each one of these assets. And I'll show you a couple of examples. This is an example of NQ. And as I said before, these levels are delivered daily to our customers every early morning to let them get ready for the next trading day. So these are the trigger points, the levels that you see here. And the red levels are potential short opportunities, and the green levels are potential long opportunities.
So this is really interesting, Doctor. I'm sorry to interrupt. We talk about one particular study called the pivot, which is similar in the sense that it's calculated before the session opens, or you can calculate at the end of the previous session. But that's a hard and fast formula for the pivots. It doesn't change. This is not that. This is adapting to the market every day.
Exactly. And when these levels are delivered, the market's price is moving between the dashed lines that you see here. the R0, Res0, and Sub0. And the delivery time, when the customers are getting these levels, the market moves between these levels. So, and the reason they are delivered daily is because they are calculated by an AI algorithm, as you said, we developed, that utilizes correlated and historical market data. It's a heavy algorithm. It runs on a spatial server. And the AI algorithm aims at providing levels with maximum likelihood for the market to react during the current trading day, while minimizing the risk of liquidity grab. That's the main challenge. That is the optimization task that the AI algorithm solves.
So it's basically balancing like a risk reward, so to speak, right?
Exactly.
You don't,
And
you can explode reward up to the upside, but then you might have a huge risk to the downside. And that's not what this is. It's finding a more efficient balance between those two.
exactly. It balances between providing entry opportunities and minimizing the risk. Exactly. And I will explain it in a minute. The market is volatile. And let's zoom in here. So this is a long opportunity. This is support level, and this is the long opportunity. And assuming we place a pending order here on this level, this is the risk should be taken, because we place the pending order here and the market goes a little bit below because the market is volatile, because of some liquidity grab phenomena, and so this is the risk here. So the AI mission, as you mentioned, is providing levels that are giving trade opportunities on one hand, while minimizing the risk on the other hand, based on historical and correlated data.
So looking at that, just if we can go back real quick, that's kind of the solid line right there where you're is that the most optimal? You call it SUP1, support one. Is that the most optimal?
The sub-zero represents the first level over the rest of the levels that are closest to the market when the customers are getting these levels.
Got it.
And the reason it's dashed to mark where the market was when the levels were calculated, and to remind that there's a higher probability for the market to break this level.
Got it.
So this AI algorithm aims at providing levels with maximum likelihood for the market to react during the trading day, and minimizing the risk of liquidity grab and volatility. And here are a few examples. This is NQ. This is real, guys. Yeah. We have many examples showing how the market reacts when it reaches these levels. It looks beautiful. And this is an example on ES. What you see here, assuming we place a pending order, this is the risk should be taken. This is an example of Russell 2000 RTY to the tick. And we have the following nice slogan. And the slogan is, EG customers are the only ones getting the EG trigger points 10 hours before the market reaches them. And this is the point that you refer to, Tom, I think, meaning that the trigger point is a leading indicator. The AI algorithm is based on a very important principle: learning historical imbalance It identifies significant price levels using statistical measures, considering price action and volatility, ATR. ATR is a measure of the volatility, average true range. And the algorithm was optimized to provide, as I explained before, the highest likelihood prices expected the market to react. So one challenge is it addresses is the liquidity graph. As I said before, it utilizes statistical measures to balance between, you said balance is exactly the word, between providing trade opportunities and minimizing the risk. And here is an example of a trade taken on a PA account, performance account, talking about prop firm. And here is a common example when support becomes resistance. And here is a very nice example on Q to the tick. And one thing, Tom, to remember, trading is all about statistics, and there's never 100%. So what are leading indicators and why are they essential for successful trading? So the EG trigger point is a leading indicator because we know about these price levels before the market reaches them, providing the opportunity to get ready for an entry. And it's based on historical data. And I'm talking about over 5 years of historical data that the trigger point algorithm utilizes to calculate these levels. So the EG trigger point is a leading indicator. And what else? So many traders combine historical based indicators with real-time based indicators. And successful trading is about combining historical analysis and real-time analysis. Still, because there's no 100%, this needs to combine with real-time analysis, looking at the market behavior in real time, how the market reacts when it reaches historical based level. So for real-time analysis, we have price and volume. Price and volume are used by traders to analyze the market's behavior in real time. And the trigger point is used by traders as a complementary tool, automatically provides insights calculated based on historical data. So we, in EG indicators, offer the following tools and services to help analyzing the market better. We offer a set of leading indicators for position entries and confluence. And as you know, Tom, that position management is also very, very important. So we offer the EG trailing stop for position management. I'll show more examples in a minute. So the EG trailing stop is based on average true range. Average true range is a measure of the volatility of the asset, and it draws the trailing path for you while in position. And here is a very nice example that I prepared. If you have questions, I'll be happy to answer. What you see here is that the market moves in a band. And in a minute, you'll see that the pending order is getting filled and the position management is done using the trading stop indicator that we developed for NinjaTrader platform.
And Dr. Levy, just a question about that trailing stop. You mentioned ATRs. is this an ATR that's based on the time frame that you're trading? So for example, if you're using a 10-minute chart or you're using a 1-minute chart here, that ATR is based on that 1-minute time frame, not a higher time frame, right? It's off the chart you use.
Correct. Correct.
Okay.
So it draws the path to trail the stop loss. It helps in a mental measure, meaning that the trader may follow the path here, knowing that the path is based on a volatility asset. So it makes sense maybe to manage the position accordingly, not to get stopped too early. And especially when, you know, the stop loss is beyond the price entry. So we don't expect any losers here.
Now, I noticed some of the bars, they just wick down into it, right? Which means they traded below. Is this something where you advise a close below before you exit your position? Or, you know, if you set up an order to execute when you hit that line, you might be stopped out even though it doesn't close below, let's say. And this is a trailing stop, so we'd be looking at the upside, but those bands, you know, if we trade outside the band, are we looking for an execution, or is it a close outside those bands that we're looking for?
So the band is the band marks where the stop loss should be trailed to, not to get stopped too early because of the volatility.
Okay. And there's your stop right there. Is that what we're seeing?
Yeah. Mm-hmm.
Yeah.
Yeah.
Okay.
So we're out of a position. We got stopped.
Excellent.
So this was the EG trading stop. And so we talked about leading indicators for position entries and confluence. Position management is about how it's an example of how you manage the position, trailing the stop. And we have exploration tools. You have a strategy based on the EG trigger point, and you can utilize one of our exploration tools to backtest your strategy. And these are the EG trigger bot and price action bot. So again, we developed automatic strategies for NinjaTrader 8 platform to demonstrate the potential return of utilizing EG indicators for trading and to allow our customers explore their trading style while they are utilizing EG indicators. And here is a demonstration of how I use the EG price action bot for exploration. And there are many videos and statistics that we are presenting on our YouTube channel. Here, I picked a day that contains several interesting scenarios. What I'm showing here is how I utilize this exploration tool to explore my trading style. So first of all, I need to download replay market data, and NinjaTrader 8 platform allows it very easily, very simple. So I pick specific date and a specific instrument. So in this case, I took October 9th and NQ. So I have the instrument and I have the date that I want to explore my trading style on. So I download the market replay data. And I'm scrolling to October 9th, as you see here. And NinjaTrader A platform is a very good platform for backtesting, as I demonstrate here. So this is the market data for October 9th. And what I'm showing here is that we can speed up the market movement if we want to get to a certain point. We can pause it. And we can go back to the original speed. And now what I'm going to do is to import the trigger point levels associated with this specific date. Again, the trigger point is a set of unique levels for a unique set of levels for a certain date. So what I did here is importing the trigger point levels for October 9th. And after I imported it, I'm attaching it to the chart. And because it's 1 minute time frame, we expect the levels to be a little bit far off the market price. And another interesting feature that we embedded in the trigger point is allowing traders load historical trigger point levels, because we observed that the market tends to react also to 1 day or 2 day previous levels. So here the golden levels represent the prior day's levels, and the red and the green levels are associated with October 9th. So now my strategy is based on loading 2 days levels, today's, current day, and previous day. These are the golden lines. And now what I'm doing here is, again, utilizing the price action bot, an automatic strategy, to explore my trading style. And it has several properties related to the position, how many quantities, stop loss, risk-reward ratio, type of trailing for position management, price action, looking at the candle patterns for position signals, entry signals, and several advanced properties like adding contracts to a winning position. This is the turbo mode. I'll show a demonstration in a minute. Right now, what I'm doing is running the bot with default settings. And the default setting, sure.
So just real quick, it's basically everything you'd want in it. It covers all the bases you would need for a trading strategy. If you were trading yourself, you need an entry, an exit, a trail stop. You don't need not everything, but this is all the things you consider for your strategy, right? What's the risk reward ratio? What are some of the triggers that I might get in and out besides the EG price indicators, the triggers? So that kind of encompasses how you might trade as a live trader. It's just automating it.
Exactly. It allows collect statistics regarding your strategy while you utilize the EG indicators, the trigger point with historical levels and types of trailing stop. I'll show in a minute how it looks while the bot utilizes the EG trailing stop. And in this example, what you show here is reversal strategies where the market reaches resistance levels, all the levels above the market, it shorts, and all the levels below the market price are support. So the way it enters the position is by placing pending orders. There's another property you can define for the bot to enter by a market order. And when a level is broken, then it is no longer considered as resistance or support, so it waits for a price action signal for position entry. And price action signal is another indicator that analyzes the candle patterns for position entry. So when the market reaches a certain trigger point level, it analyzes the candle patterns and generates signals accordingly. So the bot trades the signals generated by this indicator. You can see these are very small arrows, red or green, according to the signal type generated by the price action indicator.
Now, will this analyze any kind of drawdown? Does it do the kind of general backtesting statistics you might be interested? Like, as new traders, we might focus on profitability, right? And I say that with air quotes, right? It's how would this have traded and how lucrative or detrimental might it be? It's easy to focus on the flat line, right? The break-even line. But does it also look at drawdowns? Does it look at time in trades, that kind of thing?
Yeah, well, it's a feature of the NinjaTrader 8 platform. After you run a automatic strategy, it displays all the measures. I think NinjaTrader displays all the measures that you can imagine, including drawdown and profit and everything.
Yeah.
So yes, so combining this tool with NinjaTrader platform should provide what a trader needs to get more insights about his trading strategy. And here, what I'm showing is I'm running the bot with a slightly different set of properties. Two main changes. One change is the trailing stop. Beforehand, it utilizes technical trailing. We explain this type of trailing in our documents. And now I'm going to move to the ATR trailing, the EG trailing stop, to see how it performs. So this is one change. So I'm going to ATR trailing. This is the EG trailing stop. And another thing that I'm going to test is the turbo mode property, meaning that when another signal is generated by the price action indicator, the bot adds another contract by a market order to the position. So if it shorts on a certain level with a pending order and the market reaches the next level and another short signal is being generated by the price action indicator, the bot adds another contract by a market order to the position. And now I'm looking at it and asking myself whether these two changes statistically improves the return. So again, here is the ATR trailing used for position management. And in a minute, you will see how it performs when it adds another contract to a winning position, given a price action signal. So this is a reversal trading.
What happens, and I'm sure we'll see here, when it adds another position and then gets that either stop, exit, or it hits a target? Does it get out of both positions or both contracts, or like you're layering into a position if you get a reinforcement of the buy or sell signal? can you layer out, or is it something that in this case we're just going to get out of our entire position?
Well, it manages the position in the same way as it does with a single contract,
Okay.
meaning that if it adds another contract, it places its own stop loss, but it utilizes the ATR for trailing for both contracts.
Got it.
So now it's, yeah, I think it added another contract and then it got stopped by the trailing. In a minute, you will see how it shorts and adds another contract to this short winning position because there was a short signal by the price action indicator, and it added another contract by a market order. So every contract added to the position has its own stop loss and own profit target. But the trailing is the same, and it makes sense because the trailing is based on the volatility of the asset during the position. So it makes sense to use the same trailing stop logic, but the stop loss itself for each contract is its own by its own.
Now,
And one, sure.
just a question, because we know the NASDAQ is a volatile market. You mentioned volatility in ATR, but some markets are more volatile. You might find different results in the NASDAQ than crude or than even the E-mini S&P or Russell. Is that something you found?
Correct. Theoretically, because the levels are calculated for each asset by its own, utilizing its own historical data, and the ATR measures the asset's volatility, then we should expect some sort of robustness of the bot. The levels are associated with this specific asset, and the ATR is about taking the volatility of this specific asset. So we expect robustness between the contracts.
Got it.
And one thing I wanted to mention is that one insight that I derived while I use this bot is just getting profitable is not only about finding a robust set of settings for position entries and management, meaning increasing the number of good trades. Getting profitable is also about decreasing the number of bad trades. And this can be done by identifying scenarios, setups, or days where it would be better for the bot not to trade. For example, on a high proximity levels. So this bot reflects a very interesting phenomena where when there are two close levels, an area of many trigger point levels, the market tends to get choppy in this area. And we know that bots, automatic strategies are not doing very well when the market is getting choppy. So we just avoid trading during this day. This is a very interesting insight that I derived when I utilized this bot for exploration.
And Dr. Levy, that has to be a conscious input to the strategy, right? To be able to say, you know, looking at this, there's a higher, and it could be in terms of risk, right? There's a higher risk that you'll get stopped out, a higher probability, like you said. So while the reward might be great, there's also a bigger probability you'll get stopped out and you won't get that reward. So let's just avoid it altogether.
Yeah. And maybe if there's a high proximity levels, then maybe we can turn not to trail the stop based on the ATR that tends to catch large moves, but scalping, not trailing, but defining risk reward ratio of 1 to 2 to 1 for days where levels are observed to be too close to each other. So it's a great exploration tool, as I said, providing statistics. And we know that trading is all about statistics and automatic strategies, along with market replay data, is a good starting point to collect statistics about your strategy and how to trade using the EG indicators. So, and this leads me to another product that we offer, the mentoring program, combined contains two courses, Futures Trader course and the NinjaTrader for All. On NinjaTrader for All course, we are about to teach how to program your strategy by yourself using the strategy builder, meaning that you don't need to be a programmer. You can build your own strategy, integrate it with EG trigger point, and explore your trading style. And in the Futures Trader course, what we show is how, for example, we show many things, many fundamental things, but one example is how we can utilize market analysis, market prep. We can analyze the history and, for example, determine the bias for the bot. Maybe we want to avoid short positions today or long positions based on market prep analysis.
Oh, that's
so in
great.
the mentoring program, we
One thing I
we're
can't say enough
discussing
about
these topics.
Sorry, Dr. Levy, I'm talking over you. I can't say enough about market breadth. That's fascinating. There are so many different measures that I'm sure you can, you probably are using and can discover. And I think that's something that people should look into, is how market breadth can give you
Very
insight.
important.
I look at it like a doctor. Doctor takes all these statistics of you, right, to see your health. It's the same thing. Market breadth is the same.
Exactly.
Yeah.
Exactly.
Sorry, I had to interject. I really like it.
No problem.
So I think the course about learning how to program your ideas in an NinjaTrader, great thing. You don't have to be a programmer. I think Jim and I could probably sign up for that, because we have all these great ideas, but we're not programmers, right? Or we think they're great ideas. Jim has great ideas, but I think that's great. Being able to, because programming is not, it isn't a first, doesn't come firsthand to a lot of people. So I think that's great. But you've covered.
And we show how to utilize EG indicator within your strategy.
Yeah, now that's great. So you've shown us a lot. Where's the best place people can reach you, Dr. Levy, to learn more about this and even take advantage?
Yeah. So one place, join our Discord, learn from our community, engage with us. You can reach me directly to my email address, and of course, you can visit our website to learn more. The website contains a link. Also, the Discord contain the link to our YouTube channel, where we publish statistics of this of the price action bot and many other educational things can be found.
Oh, that's great. I really appreciate you coming on here and explaining what you do at EG Indicators and what you've built at EG Indicators. Always fascinated with, systems analysis, and the fact that you're using AI in this it makes it even more compelling. I'm just floored. So thank you for coming on, and I hope everybody at EG Indicators as well. And I know we got to talk to Hen and Drew and meet them. So really, really great stuff you're doing here. But I want to thank you again, Dr. Levy.
My pleasure. Thank you very much.
Great. And we'll get you back on here soon. I want to thank everybody for coming and watching Traders Workshop this week. And we're not done today. We have one more show to go. Jim Cagnina is going to close up the day with bars closing. He'll address some of the issues from this morning, trade he had, And we'll look at what happened this afternoon on a very slow news day, but not slow here at Traders Workshop. I want to thank everybody again for coming. And in the meantime, have a great trading day.